So we're going back to a world where things are based on reality. And what's going to give us reality is gold and silver, because they're real. They cannot be conjured up out of thin air by the central bankers. Saturday, February 8th, 2025, Maneco 64, home of alternative economics and contrarian views. Today, we're going to look at why, in my humble opinion, the dollar and all other major currencies or fiat currencies are in their suddenly moments. But before we do, I'd like to give a shout out to one of our affiliates, Dirty Man Safe. Well, Dirty Man Safe is underground safe solutions. You can store your valuables like gold, silver, coins, bars, documents, and crypto wallets. It's hidden protection, instant access. If you want to find out more about Dirty Man Safe, check out the link below in the description. So back to the suddenly moment. What does that mean? Well, in his 1926 breakthrough model, Ernest Hemingway wrote a scene, and the novel was Sun Always Rises. He wrote a scene where Bill asked Mike, he said, "How did you go bankrupt?" And then Mike replied, "Two ways, gradually and then suddenly." And that's what I'm seeing with the dollar, not just the dollar, but all the other major fiat currencies. And you might ask, how can the dollar go bankrupt? Well, and the other currencies as well. Don't they trade against each other? Yes, they do. Fiat currencies do trade against each other. But ultimately, the monetary asset that gives us the signal that the dollar and all other fiat currencies are going bankrupt is gold, of course. And up until August 15th, 1971, the world's monetary system was anchored to gold. But as we know, or most of us know, and I've spoken about this many times, this was a result, of course, of the Bretton Woods Agreement in 1944, where the United States led the way towards the end of World War II and designed this monetary system where the dollar was as good as gold, $35 per 1 troy ounce of gold, and all the other fiat currencies were fixed to the dollar. But unfortunately, the U.S. abused that power. It issued too many dollar obligations versus the amount of gold it had. And Nixon closed the gold window, and it was supposed to be the new American dollar. It was supposed to be a new age. But we were actually entering the gradual part of the bankruptcy. Of course, the mainstream media always reports the opposite, right? And you might be wondering where I got this. Well, I have to thank a lot of the viewers for over the years having sent me a lot of items. And I'm not asking you to send me anything, but if you do want to send me something, send it to Gold Investments here in the UK. They'll keep it there for me. I go there once in a while. Yes, the link to Gold Investments is below in the description. But anyway, I have to thank Rumpelstiltskin in Japan. He's an American in Japan, and he was very kind to send me this magazine. And it's a Newsweek published in Japan, August 30th, 1971. So a couple of weeks after Nixon suspended temporarily the convertibility of the U.S. currency into gold. And yes, it was temporary. And this bankruptcy that actually was triggered by Nixon and other people, of course, it's not just Nixon, that's been gradual for over 50 years. But I think we're entering the suddenly moment. And I've been aware of this for over 2 decades now, of this situation, because I've done a lot of studying. It wasn't at university, because they don't teach you this at university. And prior to starting this channel, I kept a blog while I was still at work in the financial sector here in London. And it was called For Sound Money. It's not there anymore, but I wrote an article on December of 2006 entitled "They Are All Sinking." And I'm going to put it up here on the screen. And there's a link there as well from an archive on the internet. And you might be able to go there and read about it. And I went through how the Bretton Woods system evolved, and how all currencies were linked to the dollar. The dollar was at the center. And I said that they're all sinking. And I knew this because of what happened in 71. At the time, of course, it was still fairly gradual, the bankruptcy. And how does it reflect itself? Well, it reflects itself in the price of gold. Or, the higher the price of gold goes, the more bankrupt the currency is, because it means the less you can get for the currency. It's the way of the state going bust with very few people noticing it. I think it was Lenin who said that the best way to destroy the bourgeoisie was to inflate the currency, and that not 1 in a million people noticed it. Hopefully by now more and more people are noticing it, and that's how it's reflected. And why do I think we are in the suddenly moment? Is it because of all the news we're hearing about U.S. aid, like how the Trump administration is cracking down on the deep state and its finances? Is it because of what's happening on COMEX and LBMA vis-a-vis the shortage in gold? Is it because of the lease rates for borrowing silver, for example, for the SLV ETF? Is it because the Chinese are buying so much gold? Is it because the Chinese regulators have just allowed Chinese insurers to buy gold? Well, kind of. These are just symptoms of this bankruptcy. But deep down, the major reason why, or from 30,000 feet, or the big picture really is that all these currencies are sinking. And this is the suddenly moment. And why do I say that? Well, because the drop in the purchasing power of the currencies, or the sharp rise in the price of gold that we've seen since the beginning of 2024, is a reflection of that. And I think, it is the suddenly moment. And I think we're very near a point where people realize that, and we're going to wake up one day, or maybe it's going to be more gradual, but we're very close to a moment where gold comes back as the major monetary reserve, major monetary asset, the major common denominator in which everyone judges values of not just financial assets, but of tangible assets, of real things, of services, everything. And I'm just going to show you here these charts. And you can see that they are all breaking out. It's the price of gold in all these different currencies, as you can see. I'm not going to go through all of them, but they're all looking very much the same. And that's the reason why I think we are in the suddenly moment. If we were just seeing the British pound, for example, break break down or gold go through the roof versus the British pound, then I would have said, no, we're not there yet. But when all the major currencies are, to me, that's an indication that that's what's happening. So these charts that I've just showed you, they're a visual tool for you to see what's happening. The fundamental tools go back, of course, to 1971, and that's been reflected in the increase in the size of government, the increase in financialization, the increase in the power of Wall Street and the bankers. What else? The increase in the amount of debt that the major Western countries have been able to accumulate. The increase in wealth inequality, because what we've had, contrary to a lot of mainstream economists, is a massive inflation of our monetary system. And it's led to wealth inequality as well, and a huge increase in wealth inequality back in the 60s, when we're still under a system that was anchored to gold, to reality. The average CEO salary was about 20 to 22 times the average worker's salary. Now it's over 200 times, and I think it's been even above 300 a few years ago. So we're going back to a world where things are based on reality. And what's going to give us reality is gold and silver, because they're real. They cannot be conjured up out of thin air by the central bankers. And there's some other indicators aside from currencies that are telling me we're moving into a more sober world in terms of value. And that is the Dow Gold ratio. As you can see here, it's still how can I say, fairly stable, but it's keeling over. This is the relatively short-term chart going back to the mid-90s. But you can see that very long-term, usually when the system rearranges itself, when there's a bankruptcy, so to speak, de facto bankruptcy, this ratio usually goes back to near 1-to-1, as you can see back in the early 30s in 1980. And just before I wrap up for today, just wanted to show you the price of gold versus in the 10-year note, which is the benchmark for U.S. Treasury securities or U.S. debt. And that as well is making new all-time highs, as you can see here. So that's why I think we are in this suddenly moment. What does that going to mean to you? Well, I'm not a financial advisor, but one thing I can say is that the value of your fiat dollar or fiat pounds or euros savings are going to go down in purchasing power. They're not going to disappear, but you're just going to be able to buy a lot less in the coming years. And in terms of stocks and bonds and investments, it depends how you're positioned. I'm not saying you should get rid of all your stocks and bonds, but I think a lot of money is going to shift over to hard assets, not just gold and silver, but commodities. So that's for you to do your research and your homework, or maybe to get an advisor. What I'm trying to give you is the bigger picture. And of course, as I've always said since I started this channel, having a little bit of physical gold and silver outside the system is going to protect you, because gold and silver are the anti-fiat currencies. So if the fiat currencies are going bankrupt, you can bet that gold and silver are going to hold their value. They're not anything. Nothing's happening to gold and silver right now to make it special. What is happening is that the fiat currencies are being found to be wanting and virtually worthless. So with that, I'm going to wish you all a very good weekend. And yes, Clive and I are going to be doing the live stream tomorrow night at 8 p.m. London time or 3 p.m. Eastern time. And yeah, I wish you all a very good weekend. Take care. Bye.